Hello again everyone, I hope you're all doing really well. I know I haven't been as active on YouTube this week. I've just been a bit more snowed in with work and other stuff lately, and I have been keeping a closer eye on another stock with Vinco Ventures as they have a big meeting coming up on Thursday. However, I thought I should do an update on one of my old favourites and another stock that I'm watching quite closely, that being ContextLogic or Wish. Since my last video, Wish stock has pleasingly mounted a bit of a comeback in its stock price, but there appears to still be some heavy lifting ahead for the company. To be fair, there has been no official company news from Wish.com since my last update, where we looked at a recent downgrade in sentiment from a major analyst. I think for now, the main event investors are looking for is the upcoming results, which, while not confirmed, are expected to come out around Remembrance Day or Armistice Day, depending on where you live, being November 11. So in this video, we will have a look at some of the most recent trading patterns for the stock, and I want to look at some of the sentiment that has been floating around for the company lately, as well as delve into a little bit about what's actually happening with the company and where they're headed. I'll try to keep it reasonably brief, so let's get straight into it. Since the stock hit its record low price last week, there has been a bit of a recovery for ContextLogic. Wednesday's trading for Wish was definitely helped by the wider return in confidence for the tech sector. I quite liked that yesterday, that as the RSI started to trend down towards a neutral position, Wish stock traded in a bit of a holding pattern, a pleasing sign of stability. There also appears to be a bit of an upward trend in the stock in terms of achieving higher lows since it bottomed out last week. By adding this purple trend line to catch the higher lows being achieved, there are some signs of buyers returning to the stock, at least for now. I've drawn in two blue lines, which I think catch a bit of a trading range at the moment. The stock is clearly seeing some upward resistance around the $5.25 mark and has definitely shown signs of support at the $4.88 mark. In terms of the timing of any potential upward movement, I wouldn't be surprised if this occurs as the purple higher low line converges with the upper resistance mark around the $5.25 price point. This could be a technical catalyst for an upward breakout. Of course, if we can have at least natural sentiment and news around ContextLogic as a company and the wider macro market to support this. In terms of where it could potentially break out to, I think the $5.80 mark indicated by this new red dotted line could potentially be a level of major upward resistance in the future. Before the stock began to sag in confidence in line with the wider market in late September, this mark was acting as a point of support and later upward resistance for this stock. So this could be a potential selling point if you've gotten in at these current lower price points. Getting back to $5.80 would be pleasing for me, as I am personally sitting in the red, having bought in further around this $5.80 price point a couple of weeks back. So on to what's been going on with the company. I'm keeping this kind of general, but to start with, some of the problems facing the company are obviously their struggles with growth. I have a couple of extracts on screen from a recent Market Insider article, which I think cover the main struggles the company face at the moment. Primarily, its user base has declined, and as a result, the company's revenue has also declined. These problems are no secret to investors in the company and are easily understood, and we have been through them numerous times on here before. ContextLogic went public at a time when the company was greatly benefiting from the advantages of being an online marketplace during the heights of the pandemic. And as the world slowly goes back to normal, the momentum has dissipated. While much of these shortcomings have been spoken about at length in the media, what perhaps is not getting the attention it deserves is the strategies ContextLogic has been doing to adapt to these changes. There are perhaps three key actions ContextLogic has been working on to stabilize the business and make it sustainable going forward. And to be fair to ContextLogic, we are not going to really know how successful these strategies have been until probably sometime next year, when we can start comparing post-COVID quarters. Wish has started to focus on retaining the users that they do have more so than attracting new customers to the platform. Of course, they still want to attract new customers to the platform. However, advertising to new customers has become more expensive now that people are not as readily looking at their smartphones all day, as they have returned to a more regular working pattern. Therefore, advertising costs for this have increased, as there are suddenly no longer as many advertising spots available. This was an operating expense that has been noted for improving in their financials already this year, and this strategy plays to the business 101 lesson that it is much cheaper to retain a customer than to attract a new one. Secondly, ContextLogic has made no secret that they are working hard to fix the logistics side of their operations. This is a tough hurdle for the company to overcome. The cost of shipping globally has blown out recently due to supply chain bottlenecks from the pandemic and have only been further exacerbated from increased demand for the services of online retail. ContextLogic has made some ground in this area, particularly in the EU region, but there is still a lot of work to be done given that they are trying to sell to a global audience and have nowhere near the existing infrastructure networks that their major competitors in Alibaba and Amazon possess. I think getting this right will be key to ContextLogic establishing themselves as a viable global offering. I'm not going to pretend to know every detail of what they are doing here, but I suspect as a business they would be focusing on developing these synergies in their identified key middle income markets, as this is the core of their user base. The one area that ContextLogic has demonstrated success in at the moment is increasing in-app advertising revenue. This is predominantly a way that merchants can promote what they are selling above other merchants, much like most other e-commerce marketplace platforms. ContextLogic has seen growth in this area, but for this to be sustained and built upon in the future, they need to get the other aspects of the business right, i.e. building a returning customer base who are not turned off from the expenses and timings associated with shipping. Without that client base, merchants are no longer going to pay to advertise on the platform, and that's, I think, when the house of cards will start to fall. Anyway, while I am optimistic about the stock, it would seem that in terms of understanding how well they are going as a company and whether their strategies they are currently implementing at the moment are going to work is not really going to be able to be properly assessed until at least 2022, I think. In the meantime, I still think the stock price is a discount, and if we can navigate the current macro complexities without eroding too much broader market confidence, I think we will see some further recovery for Wish stock. What do you guys think? Is Wish stock going to continue to recover in the short term? Where do you think they are heading as a company? Let me know in the comments below. Until next time everyone, may the markets trade in your favour. Cheers.